Hey there, it's Jared Hamilton with the Hamilton Group at Cherry Creek Mortgage. Welcome to another edition of Java with Jared. Happy Friday, everybody. Hope you're doing fantastic, and happy start really to the Memorial Day weekend. Really kind of the official kickoff of summer really for everybody, and actually the official kickoff for the home buying season is, remember, kids are getting out of school, and so those that were waiting and didn't want to disrupt their kids' school schedule, now is going to be the time where they are starting to get out there, look for homes. So make sure you're in touch with your database, and you're there and able to provide any real estate help as possible. We're doing that with our database. So give us a call if we've got some scripts and things like that that might be helpful. So give me a call, and we'd be happy to kind of share with you what we're doing. Well, we had a pretty busy week in terms of economic data, especially from the housing sector. Lots of data, important news by the Fed, and just a lot to really digest. Rates finished the week about the same as where they ended last week, slightly better, no big movements. We're getting real close here to this 200-day moving average, so it'll be interesting to see if we can somehow break above that. It's providing some real ceiling of resistance. If we break above it, it's a good thing. Last time we were trading above the 200-day moving average in terms of mortgage-backed securities, which means lower rates, was back right before the election. We broke down beneath that. So the last 6 months we've been trading below that. So if we're able to eventually push through that, that would actually be a pretty good thing. Well, here's what happened in terms of the economic data. We did see new home sales, and that showed a big decrease there. It was down about 11.4%. So on appearance, it was a real big downward movement. However, remember, it was coming off of the one of the best new home sales numbers in about 10 years. It was the second best actually in 10 years. And actually that previous month's was also revised higher, so it was really even stronger than expected. So even though we did see a pretty big movement down of 11.4%, it's not that concerning because that previous number was just so good. And again, remember, new home sales just measures contracts for new builds. We also did see the FHFA, the Federal Housing and Finance Authority, appreciation index come in, and that showed an increase of about 0.6%. We also did see existing home sales. That showed a decline of 2.5%. Again, that number was coming off of, or that decline is coming off of one of the strongest numbers in 10 years. So again, ultimately not a huge concern. And also, as we know, there's really low inventory. So that's also providing some pressure on these numbers not continuing to set new highs. If there was more homes on the market, my guess is that there would be even more sales happening. We also did see the second look at the first quarter GDP, and that was revised higher. Previous number was first quarter GDP was at 0.7% increase. Now it's at 1.2%, so showing that there might have been a little bit more momentum. Okay, but the big news really was the Fed minutes, and that came out, and everyone's looking to see, okay, what is going to be the direction for the Federal Reserve? Now, they did allude to a June rate hike. They are meeting again in June, and it's a meeting that does have a press conference afterwards, so it's widely speculated that there will be another increase to short-term credit. So that wasn't really any big surprise to the market. What they did do, though, is they also talked about what their plan is going to be with tapering the Fed's balance sheet with mortgage-backed securities. And that's been something that the market's really been worried about, both the stock, but especially the bond market. And the plan that they released was actually one that the bond market and mortgage-backed securities liked a whole lot. They basically said they're just going to do, instead of quantitative easing, which you heard back, when we were in some economic turmoil, probably some quantitative tightening. What that means is that they're going to just stop reinvesting at a very tempered pace all the runoff of mortgage-backed securities. As mortgage-backed securities have been paying off, either in terms of people selling their house and paying off their mortgage or refinancing, the Federal Reserve has been rebuying mortgage-backed securities with that money, and so they're going to slow that. The market was worried that they were just going to stop that, but what they're going to do, they're just going to slowly stop reinvesting all that. They're going to put a cap on it every month, and they're going to reevaluate it every 3 months on how much that cap's going to be. So again, very methodical, very, very slow, and the market liked that. Next month is going to be a big month. We're going to, because we're going to see the Fed meeting, and also next week, we're going to see the jobs report come out. So we'll keep you informed with that. Once again, I hope you guys have a very wonderful weekend, long weekend. Again, it's a big time where people go out maybe and start looking for homes. So if you are working with anybody that needs some help, please feel free to give us a call. We're always happy to help. Hope you guys have a wonderful Memorial Day weekend. Again, give us a call if you wanted to talk about some of those scripts for getting in touch with your database, and we'll talk to you soon. Thanks for joining me with Job with Jared. Bye-bye.